Welcome back to Fast Money. Despite skepticism from the big regulatory powers that be, Wall Street's enthusiasm for crypto is heating up. Bob Pisani's breaking it down from the Sandler O'Neill Global Exchange Conference here in New York City. Hi, Bob.
Hello, Melissa. SEC Chair Jay Clayton spoke to us exclusively today at the Sandler O'Neill Conference. He made it clear that he supported the development of blockchain technology and even said it could be especially beneficial to the securities industry.
I think blockchain technology has tremendous promise for the securities industry, eliminating costs. I mean, the cost of verification in the securities industry, incredibly high. If we can make that more efficient, terrific.
But the crypto community is eagerly waiting for clarification from the SEC on three important issues. First, whether ICOs, initial coin offerings, are securities and hence regulated by the SEC. Second, whether altcoins like Ether and Ripple are securities. And finally, what criteria must be met for the SEC to approve Bitcoin ETFs? We've been waiting for a couple years about this. Clayton declined to comment on how the SEC would rule on these issues, but he made it clear that the industry would have to conform to existing rules and regulations regarding the sales of securities.
I understand that there's a great deal of discussion about these crypto assets, but again, we're not going to relax our rules based on the level of discussion. We need to know that the pricing is certain. We need to know that the assets are there. We need to know that it's going to function as our retail investors would expect those products to function.
Finally, over the last few months, major Wall Street firms have been getting in on the crypto action. Goldman Sachs is set to launch its own Bitcoin trading operation, and reports are out just today that Fidelity is now looking to bulk up on hiring personnel for crypto projects and possibly build its own digital asset exchange. These steps will likely lend added credibility to the realm of crypto. Now, coming up very soon, don't go away, Brett Redfern, the head of trading and markets at the SEC, is going to be with us. This will be his first interview exclusively on CNBC. Melissa, back to you.
Yep, we look forward to that, Bob. Thank you. See you then. Well, many Wall Street firms hammer out their initial plans for trading cryptocurrencies. One firm has been doing so for a while now, and they're set to dive even deeper into the crypto world. Bart Smith is the head of digital assets at Susquehanna, but here on Fast Money, we are calling him, really dubbing him now, Wall Street's new crypto king. Welcome, Crypto King.
Thank you, Melissa.
What are you trading right now? How much are you trading right now? And what's your ultimate goal?
So we've been active in the space for a number of years. We have a dedicated team of traders and technologists and ops and admin people. We have been trading Bitcoin for primarily, but in 2017, as kind of the marketplace expanded, we expanded the number of coins that we were trading and the number of exchanges that we were providing liquidity on. And then in anticipation of the futures coming out, which didn't really come out with a tremendous amount of liquidity, but in April and certainly in May and June, trading somewhere an average of a couple $100 million a day across CME and CFE futures combined. That's not retail, right? So for institutions out there who want to buy something other than cash-settled Bitcoin futures, we're going to offer, a small number of cryptocurrencies, virtual currencies, call it 4 or 5, that we feel like is consistent with the regulatory landscape that's out there.
So when you say consistent with the regulatory landscape, you mean ones that most people consider a commodity versus a security?
Yes.
And how is that sort of influencing how you're building out this desk at a time when a lot of other people are doing so?
So, I mean, the regulatory landscape is real, and I think there's a big debate publicly going on about whether there should be more or less regulation. And I think from our standpoint, it's really about regulatory clarity. And I think there's been a tremendous amount of focus on the SEC and Chairman Clayton's comments today, and Chairman Giancarlo at the CFTC, but it's really a whole host of other regulatory agencies out there because the ecosystem kind of expands beyond traditional financial assets. I think that the clarity will allow institutions to come in more than anything else. The institutions don't like to invest into uncertainty. Mm-hmm. And so we're just taking the most conservative approach that we can and make sure that we are operating as such going forward.
Mark, give us a sense, what is the demand like? So you talk about all the stuff that really needs to happen here, but you're a firm that you probably have thousands of clients and you trade actively with hundreds on a daily basis. Is part of your strategy getting ready because you think there's this, as our main man BK says, a wall of institutional money coming? And give us a sense for demand once you get more clarity around the regulatory.
So there's a lot of conversations, and it's always difficult to parse out if they're immediate interest or longer term interest. So there's a lot of plumbing that needs to be built to trade cryptocurrencies that are different than equities or fixed income, right? So in that regard, the conversations are real, and we're kind of building it out, and we've built out an institutional grade platform that could scale very quickly should that switch get flipped that BK and others have talked about. What are the things that are going to make that switch flip? And it's the infrastructure, it's regulatory demand, it's really just a lot of education. And I think a qualified custodian is something that's been well talked about. I think that would allow for ERISA assets and 40 Act assets to come in. Frankly, I think we've been very advocating for an ETF. We think it checks a lot of the boxes for regulatory concerns, specifically as it relates to retail investors, and it checks a lot of the boxes for institutional customers, as far as custody and taxation and anti-money laundering and know your client, all the things that are around it. An ETF checks a lot of those boxes. So Chairman Clayton has made his concerns very clear, and it's up to us in the ecosystem to try to address those concerns that he stated in the denial last year of the coin ETF.
Sort of bigger picture, Bart, when you see order flow come across your desk, how does it compare to what is going on in the equity markets? Is there a correlation or an inverse relation? I mean, what have you noticed?
So as far as a correlation, as far as price movements, we haven't seen much correlation at all. And I know, and I think people look at very short-term swings.
People want to see it as a sort of a gauge of market sentiment or appetite for risk.
It tends to be driven by different factors, right? I would say that trading cryptocurrencies is way more analogous to other asset classes than you might think from a market maker's perspective, managing risk and understanding kind of the operational sides of it. But as far as kind of the investor demand for it and what drives the Bitcoin and other cryptocurrencies, we have yet to find much of analogy in the driver of it.
Right. I'm not doing any sort of correlation analysis or anything like that, but when you put the charts on top of each other, they look pretty similar when it comes to the S&P 500 and Bitcoin, but you don't see that yourself.
It's a much different ownership, right? It's not an institutionally driven marketplace like the S&P 500 primary,
right,
is the biggest driver there. So I think the inputs to those movements are different. It is a risk on, risk off, but I think the drivers of that aren't earnings or interest rates. It's regulatory, it's technological advancements. It's a whole host of other things that are out there.
You see volume pick up when prices are higher, or does it not matter? Volume stays the same no matter what?
No, I think generally when there are severe price movements in many asset classes, you tend to see the first reaction is liquidity tends to kind of dry up as people kind of freeze, right? Should that persist in ongoing, that tends to intensify. So I don't think in that.
What are you seeing here with Bitcoin sort of in this range?
Well, it's been, it's the world, it's a pretty wide range, right? So in the last couple of months, the world has told you that it's worth more than 6,000, right? It gets down to 6,000, people buy it, and then it's worth less than 9,000, and we find ourselves kind of in the middle of that range today, and that's where it's been kind of knocking back and forth. And, what is the catalyst that creates that breakout up or down? There's a lot of technicians out there that are probably better suited to opine on that, but that's kind of where we are in that range, and we're right in the middle of it today.
Bart, thanks for stopping by.
Thank you very much.
Appreciate it. What do you think?
Well, it's really interesting to see these guys have been at the forefront of a lot of different new asset classes, and it sounds like that they're going to be very systematic about doing it in line with all the regulatory. And so once you get more framework around that, you're going to see the institutions come in. It's going to kind of correspond with all of this custody and all this stuff ready to go. So to me, that's the bullish. That's the most bullish case, right? Is that the institutions are going to come in, and that's going to be the catalyst.
Well, and an institution that's willing to put its own capital to work. I mean, in other words, I think that's a big part of this, and that's kind of a throwback to the old Wall Street, which that's one of the big issues with markets today, is that institutions haven't really put a lot of capital at risk.
We are back with two important questions. Are cryptos commodities or securities? And how will the SEC regulate ICOs? Let's try and get some answers to that right now. Head over to the Sandler O'Neill Global Exchange Conference in New York City. Bob Pisani is there. He is sitting down with Brett Redfern in his first interview ever as a director of the SEC's Division of Trading and Markets. Take it away, Bob.
Thanks very much, Melissa. Brett, we've known each other many years, but this is our first interview in your role as Division Director of Trading and Markets at the SEC. Let me just pick up on the whole Bitcoin and blockchain issue. We spoke to Chairman Clayton this morning. He made it very clear that he was supportive of the concept of the blockchain, but he was not going to change the definition of a security to suit anybody's interests. When can we expect some clarification on some important issues? For example, are ICOs securities? Is alt currencies, altcoins like Ripple and Ether securities as well? Give us some idea of when we might be able to get clarification.
You know, one thing that I've realized when looking at these issues is that it's not as obvious as you would think, right? So we've had a number of different products that we've looked at, and we've created this prong test, the Howey test, where people look at the different characteristics and have to determine it's a security. And quite frankly, not all of them are obvious on its face exactly what it is. So we continue to try to clarify where possible. I think that there will be more statements coming forth from the Commission on this. But in the meantime, we're highly encouraging any market participant who's involved in the space to really look at these products and run that test and decide whether or not they meet the prongs of being defined as a security.
The chairman declined to say whether Ether or Ripple were actual securities, but is it fair to say that this is likely ultimately going to be litigated in the courts?
It's unclear to me whether or not that's going to be litigated, and I don't want to speak about any specific products. And I do believe that there will be statements on at least one of those products forthcoming in the future about, you know, providing some more guidance on that. So I don't know what the likelihood is of litigation, though, on those specific products.
So will we be still 6 months, a year down the road? I guess the community keeps asking us, when will we get some clarification? Will we know a year from now? Will these issues be resolved?
I mean, you know, I think the messaging from the chairman and the commission has been pretty clear that when he looks at ICOs, there's a number of these products where he has said they do meet the definition of a security. And by meeting the definition of a security, there's a lot of things that go along with that. There's broker-dealer registration. There's, are you trading on a registered exchange or an ATS? And so I think that, you know, it behooves all of the attorneys and the accountants and everybody else out there looking at these things to run that test.
Has anything actually happened? Has anybody actually come forward? Has an ICO come forward to the SEC, an alt currency, an altcoin come forward, a crypto exchange, and come forward and say, we want to register as a security? Has anybody done that?
So we're looking at this both on the security level. We're also looking at broker-dealer registration, and we're also looking at exchange registration for people who are trading these coins. In trading in markets, we're primarily dealing with broker-dealer registration and venue regulation. And I can tell you this, that there are a number of so-called exchanges out there that are trading ICOs that I would think that we would see more registrations as an ATS or as an exchange.
That sounds like a no. There isn't anybody coming forward.
I think that we are underwhelmed by the enthusiasm for coming within the regulatory structure right now.
That's an interesting answer. Let me just move forward. Walk us forward a couple of years from now, because the chairman made it clear he's not opposed to the development of this market. Suppose somebody was to come forward, an exchange, and say, we want to register as an exchange and we want to trade 15 coins, for example. There's no infrastructure that exists to do this right now that satisfies your needs. For example, how do you determine a price? How do you do clearing and determine things have been transferred? Under what system is it set up? You would have to essentially create an entire superstructure to allow that. Is that right?
Well, you know, I mean, look, there's some things that exist, right? So the registering as a broker-dealer, it's pretty clear what has to happen there. Registering as an exchange or as an alternative trading system, which is the exception to the exchange where somebody might have to do that, that is there, right? And there actually have been some folks who've come forth and started the process of putting in a form, what we call ATS form, so that they could conceivably be an ATS. Like I said, I think that we would like to see more of those. On the broker-dealer side, there are also some participants who have looked into broker-dealer registration issues as well for potentially acting as a broker-dealer for some of these securities. But that doesn't mean that the overall infrastructure is ready for.
Well, that's what I mean. You're the guy that's going to actually set up that kind of infrastructure, I presume. You're the head of trading and markets. Pricing, for example, you know, the pricing in these coins it goes all over the place right now. In the securities market, the stock market, there's the national best bid and offer, an NBBO. There's the regulations for how the price bid and ask happen, I presume that would have to be developed for coins as well. Am I correct?
I mean, when we look at fair markets, fair and efficient markets, you would like to think that you know what the best price is. So if you have a product where on this venue it's quoted here, and on that venue it's quoted there, and the prices are all over the map, then you have to ask what is a fair price in that stock. Understanding the price also helps you to understand best execution. Customers want best execution when they're trading in things. If they don't know the prices, how do they know the best execution?
You seem to be saying that you do need to develop some kind of pricing mechanism that everyone can understand.
I think it's early days, and we're looking at a marketplace that is evolving and still a largely unregulated space, and we're interested in encouraging the development into a more sound regulatory structure.
How concerned are you about market manipulation? We've heard about these. They seem to float out there, these concerns. This is at the core of what you do, protecting against market manipulation. How do you deal with that in this space?
I cannot underestimate or understate our concern about this. You have venues which are trading products where investors have put a lot of their money, where it is unclear whether or not there are clear standards for protecting against market manipulation. We're talking things like spoofing, talking about pump and dump schemes, talking about fraud, right? So there's a whole set of issues that could potentially arise in this space without being within a regulatory structure.
You're the man that's going to set this all up. Would you promise to come back and keep us up to date on what the SEC is doing?
I certainly will.
Thank you very much. Brett Redfern is the head of the Division of Trading and Markets for the SEC, and this is first interview and exclusive with us at CNBC. Melissa, back to you.
All right, thank you very much, Bob Pisani. And given all the regulation talk around the crypto space, we couldn't help but bring in our own crypto baller, BK, to weigh in on what Brett Redfern just said. What stood out to you? There's a lot there.
There's a lot there. So the challenge that Mr. Redfern has, and all regulators has, we have a global asset that's subject to local regulation, right? So that's what everybody's wrestling with. Not only that, what stood out to me is the hybrid nature of these assets, okay? So if you're doing an ICO and I'm giving somebody money to start their software, maybe that's a security. But once that network is live, and once that coin is being used as effectively as commodity or oil within the machine, then maybe that's a commodity. So I think what we're going to look at, what we're looking at, and Chairman Giancarlo said some really good things about this, is kind of a hybrid approach to these assets.
Well, I mean, that's exactly the dilemma that Ethereum faces, correct? I mean, Ethereum had these coins initially, but now it's its own network functioning, and it's more like a commodity at this point, the token Ether.
That's right. And in fact, it's called gas when you spend Ethereum to run the network. And so we'll have to have some standardization around what does it mean to be a decentralized network? How many nodes do you have to be decentralized, and some definitions around that. It wouldn't surprise me if the SEC came out and said something like, Ethereum might have been a security at one point, but today it's a commodity.
I'm so glad that Bob asked about market manipulation, because there are Bitcoin whales out there. There are ICO whales out there when it's a handful of holders owning the vast majority of a single asset. So Bitcoin, 40% of Bitcoin held by 1,000 wallets or so, roughly, something around that,
something
right?
Around that, yeah.
Who's to say that nobody's dumping it all together, colluding and then dumping the...
We've seen it in every single market, right? I mean, we've seen it in LIBOR, we've seen it in currencies, we've seen it everywhere. So, it wouldn't surprise me to see it happening here. Of the Bitcoin whales, a lot of those are the hodlers, right? They've had it forever. They're never going to sell it.
Because is there risk that the SEC is kind of slow to regulate, and there's other countries who kind of take up that charge, and we see a lot of the ecosystem go offshore?
Yeah, and you're already seeing that.
We're seeing it with ICOs, right?
You're already seeing that. So Asia is huge. I can't understate that enough, how big the adoption level in Asia is. And, what's happening is the ICOs that we've looked at this year said, you know what, we're not going to touch U.S. investors. They've raised $6 billion this year, and most of that has been offshore. Nothing here. It's unfortunate because some of the best developers in the world are here in the U.S., but all the adoption's happening in Asia.
I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A.